Hey guys, Alchemist here. I hope you've all had an incredible week, and I'd like to welcome you to episode 4 of the weekly market forecasts. This week and moving forward, I will only be doing AUD EURUSD, as well as GBPUSD. I'm no longer going to be looking at US30. To be completely honest with you, it's not a pair that I think I can actually analyze very well. It's not one that I've ever traded in my life. And I think a lot of people are actually moving away from trading US30 now. So I'm just going to stick to what I know best, and I'm just going to stick to the Forex pairs. So we will be doing AU, EU, and GU. And I have also noticed that these videos haven't been performing on YouTube as well as my other videos. So please guys, I am asking for your honest feedback here as to what you'd like to see moving forward, whether they be a bit more trade recaps or what it is exactly you'd like to see on the channel. I do also want to let you know that I'm going to be doing a lot more self-mastery content that's going to be posted on here. So there is going to be another video throughout the week, which is going to be a free access to one of my notions that I'm creating for you guys on how to be productive. So if you do want a copy of that, please do let me know below, and I will be emailing them across to everyone that asks for a copy. However, let's get into it today. So if we look at AU now, we're looking at the weekly time frame, and the two objectives that we have on the weekly are to identify our most recent supply and our most recent demand zone. So now that we have set a lower low here, this here is now going to be our new supply zone. And in terms of our demand, we can look here and look to the left as to what we're coming into. It's this here sell to buy, or this pivot created demand zone, which also had interaction with the supply zone to the left. So if you're new to this channel, one of the most important things that I look for whenever identifying a POI is seeing that interaction between supply and demand, and seeing price moving hands, and seeing who's actually still in control. So this here would have been that demand zone which flipped this previous supply zone. This is what price is now currently tapping into. We could potentially start to see a bit of a bullish pullback into a better price zone to then take continuation shorts. But let's jump down to the daily and have a look as to where we're actually situated. So on the daily, let me just make this a bit bigger. On the daily, if we're looking for a structure point, it's going to be this here. So this bullish pullback of 217 pips, which then broke. This here is not enough for me to be classifying as a structure point, as on AU, on the daily, I do need to see 110 pips pullback. I am very mechanical and methodological in everything that I do. So again, if you are new to this channel, I've created a completely discretion-free systematic approach to trading, which you can utilize on any pair. I've broken it down especially for AU, in terms of pip values that we need to see, as well as our entry criteria, liquidation models, and everything else. So this here would be that daily boss. And the highest point above this line is going to be our daily high. And because we haven't yet had a bullish pullback of 110 pips, we cannot mark out our daily low just yet. So we can just put this here, but just note that this is not actually our daily low. To see our daily low, what we'd need is price to come down, give us a bullish pullback greater than 110 pips, and then the lowest point there, that would be the daily low. However, that has not yet occurred, so we cannot yet mark out exactly where our daily low is. Just know it's going to be somewhere in this region. Again, on the daily, all we need to do, daily high, daily low, daily boss, 4 hour. So 4 hour, let's identify our most recent 4 hour breakup structure. So we start from here, we follow price along, and then we'll arrive at this point here where price gave us a pullback greater than 90 pips and then broke to the downside. This here was our 4 hour boss. And the highest point above would be the 4 hour high. And just like we saw on the daily, just because we haven't yet seen a bullish pullback of at least 90 pips, we're not yet going to be able to mark out where our 4 hour low is just yet. I'm just going to label this daily plus 4H low, but just keep in mind that's not actually set in place just yet. So what can we say? We're tapping into this weekly demand. We can expect somewhat of a bullish pullback. As to where we can pull back to, let's dissect this price action here. So we have this this demand zone here. When price has actually interacted with this, hasn't really had too much of an interaction at all. Potentially, if we were to look at this on the 15-minute zone, there could be something here. And then what we also want to be doing is straight away marking out our extreme, because that is always going to be a valid POI. So we can mark this here as a supply zone. If we look at these interaction weeks, so price is pushed down, tapped into something here, and then left this week to the upside. This here, if it has interacted with something on the 15-minute within this zone, will be valid. If not, it won't be. So in this scenario, I'm just going to drop a quick horizontal line here and have a look at the 15-minute. And then see if we've actually interacted with something. Yes, we have. So if we look at this zone here, this was a very nice supply zone at the time. and then price has interacted with that supply zone, left these little buy to sell wicks, which price has then tapped into here. And this is why I say that interaction piece is so important. So we can see at this point here on the 15-minute time zone, it's 15-minute time frame, supply was in control. It pushed down and set a new lower low. If this supply zone was to hold, then we would see price pulling back up to here, setting a lower high, interacting, and then setting another lower low. But that's not what occurred. We actually ended up setting a higher high. So at this point here, demand took control in these buy to sell wicks. And then when prices come back down to this point, demand did have a reaction, but essentially suppliers were still in control and were able to push the market lower. And that's why we look for that interaction piece. So that's what we're going to look at on the 15-minute. Let's go back out to the 4-hour. So just wanted to show that this validates this as a valid zone to be looking for shorts. We do also have this POI. Just mark it as a supply. And then if we look here as well, so if we were to use the wick as the demand zone, prices pushed down, interacted, and left these wicks to the upside. So this here as well. We can even say that these were buy to sell wicks at the time, and then price actually swept them. And so the new zone would actually be the upper half of this wick. Okay, and it looks like we are actually just creating some more buy to sell wicks here. But again, we don't want to be buying within this, right? As we're about to see as well on EU and on GU, all markets are very bearish at the moment. Counter trend longs are never going to be a great idea when we have such bearish markets like this. If it's within your trading plan, go ahead. Maybe if you wait for a 15-minute change of character or something, just please have conservative targets with where you're targeting in terms of where you're going to get out of your trade. So if you are going to take a buy from here, don't try and hold it all the way up until here. If it gives you enough of a reaction to get out here, please do. For myself, I only target 5R per week. Up to you what you want to set your targets at. But if we set something which is a bit more realistic and a bit more manageable that we can consistently execute over time, we'll be able to scale any account much better than if we're just trying to catch that one 30R banger or 40R banger, as you see some people apparently doing on Instagram. Not a lot of people actually are happy to show their MT4 stats or MyFX book or anything like that. So it's yet to be known if that's actually real or if it's just a trading view markup. But hey, I'm not hating on anyone. Everyone just should be staying in their own lane and helping each other. The trading community already has so much bullshit in it that we don't need to be adding any more to it. But I'm getting off track. All we need to do here, identify our POIs, be realistic with your targets. Don't try to hold it to the moon or hold it to hell. Just make what you need to make and get out. So if we are going to be using this to try to frame up any sort of entries, we can also extend this to the bottom of this wick, as this is all that interaction zone, which is actually when we tapped into that weekly demand. We tapped in, we absorbed the bullish orders, and we continued bearish anyway. So ideally what we'd like to see is price setting a 4-hour low. How are we going to do that? Well, we're going to have a 90 pip pullback. Once we have that 90 pip pullback, we could identify this point here as that 4-hour low. So let's just mark this hypothetically. Obviously this is just a line that I've drawn on, and it's not the real 4-hour low. But if this was to be the 4-hour low, then we could identify our 4-hour range as this. This would actually be a well-priced zone then. This I would look as just a catalyst for a pullback. This would be another very well-priced zone. And given that this is nested so very close to this supply zone here, it could potentially just be used as inducement for this zone. But again, if we do get realignment in this zone, I'm more than happy once the 15-minute was to turn bearish to be taking shorts from there. So this potentially could be liquidity to be swept. This could also be liquidity to be swept, but given how far away this is from the zone, it's not really inducement as it is above here. But yes, if we were to get up until this point, once we'd actually set this 4-hour low, and we had a 15-minute realignment bearish, we can definitely be taking shorts from this zone, or this zone. Depending on where we're situated would depend on where our targets are. And all the members have the flowcharts exactly when 4 hour is bearish, what they need to be seeing to be able to enter a trade. And if they do enter a trade, where they should be exiting as well. Everything is 100% mechanical, no discretion at all. And if you are interested in joining the course, there is going to be a link in the description below. There are a couple of last spots available on the Foundations 50 plan, after which prices will be going up again. So if you do have any questions about the course or anything like that, please let me know. Otherwise, let's have a look at EU. Okay, so jumping onto EU, we're going to start on the weekly. And again, all we need to do here is just identify the most recent supply zone, as well as the demand zone that we'd either just tapped or could be approaching. So at this point here, we're going to identify this candle as our supply zone, as this was the one that was actually successful in setting a lower low. Now, in terms of our demand, I'm going to drop a horizontal line here and have a look as to what we're actually tapping into. We can see we're all the way down at the wick of this candle here, which is actually swept liquidity. So this candle here, and get rid of this line, and I will just show where the liquidity has been swept, being there. Mark this here as our demand, and then I'm just going to drag this to the right. So that's currently where we're tapping into. I believe once we do break below here, or if we do break below here, sorry, we will be seeing some sort of a very significant pullback, as there's going to be lots of liquidity resting under here. Again, we are looking at the weekly time frame here. So below all of these, that's about 10 weeks there. There's going to be a ton of liquidity resting below here. We haven't actually been this low since 2002, so it's been a good 20 years. Hopefully we will be seeing some sort of pullback. But something I want to note here as well is I often see a lot of traders waiting to see things like this happen to then just trade the bullish pullback. And when we look at price, we can see how bearish it is on every single time frame. Why are we looking for buyers, right? They're never going to be as highly probable as the sells are going to be, and they are also going to have a lower R to R. So yes, there's going to be a pullback. Do we have to trade it? No. Once that pullback gives us a significant enough reaction, then we can look for the timeframes to realign bearish again. And that's when we can take the real continuation short. Why do we keep trying to spot the bottom and trade it from the bottom? Whereas if we just wait for price to pull back into a more well-priced zone and then take that continuation short, we'll be a lot better off. So again, that's all we need to do on the weekly. Let's just jump down to the daily. And in terms of daily, the daily break of structure is going to be this guy here. If you haven't seen last week's one, that was actually the daily low at the time. So this here was the daily high and this was the daily low. We pushed back into premium of this leg and then we continued lower. I wouldn't use this here. To me, this is something that a lot of people like to call internal structure. If you're a part of the course, you'll know that I hate that word. I don't use internal structure. I look at the bigger picture and then use the fractal nature of price to look at that in a smaller time frame. However, internal, that's just a change in order flow. That's just price changing hands. It's not going to be structure. It's not going to hold majority of the time. Okay, so we don't use internal structure at Millennial Wealth Group. We're just going to be labeling this here as that daily boss. Therefore, this would be our daily high. And just because we haven't had a significant enough pullback, we're not going to be able to actually spot where our daily low is going to be. Ideally, we will probably sweep this demand zone and then we see a reaction, but we're just going to wait and react rather than predict. I'm just going to label this here as daily low, just knowing that it's not actually yet set. So on the daily, our objectives have now been met. I'm just going to minimize this here so that it's not in the way when we jump down. And then on the 4 hour, looking at this pullback here. So after we actually broke this daily, this would have been a 4 hour low once we had this pullback, which was, 100 pips. And then once we've had that, this would have been our 4 hour low at the time. And then once it's broken, that would be the 4 hour break of structure. If you haven't watched my market structure video, I will be linking it in the top right corner here. So please do go ahead and refresh your memory on that. Or if you haven't watched it, please do watch it. And if you have any questions, please do let me know. So that there would have been that 4 hour break of structure that we were waiting for. Meaning this here is the 4 hour high. And again, just because we haven't had a significant enough bullish pullback, we're not going to be able to identify where our 4 hour low is just yet. So this is going to be daily plus 4H low. And we'll just know that it's not actually set yet just because we haven't yet seen that pullback. So what we can frame here is if we are to see a reaction once this demand zone is actually swept and we do start to go bullish, let's just say for argument's sake, just because we don't yet have a 4 hour low, let's say it was set somewhere around there. If we drop this here, okay, ideally we'd be wanting price to come back up into premium. And what we're going to do is look for POIs which have had interaction. Okay, there's a few other things, but I'm just going to keep those for all the members of the group. But if we just look at interaction points here, so this here was demand which put in a higher high, price came back, interacted with that demand, set this supply, which is also swept liquidity above the previous candle. We can also see these buy to sell wicks, so we could probably even refine it to that zone there. Yeah, so the bottom of this wick to the top of that wick. Okay, if we push down further, we can see this candle here as well. Okay, the next candle actually swept the liquidity above this. this candle here, so the liquidity above there. Okay. So if this was, say for example, our 4-hour low at the moment, this would most likely be a catalyst for a pullback, just because of where it's actually situated in the leg. If you're unaware about what that is, it's all covered off in the course, but if you do have any questions, please do leave them below here on YouTube and I will get back to them as soon as possible. So this here would be a catalyst for a pullback. This ideally would be a very nice zone to be looking for shorts. Again, we're not just going to be waiting for price to come up until this zone to actually enter. If we do see a reaction here and we get 15-minute realignment, we can be taking shorts. Just have a little bit of more of a conservative target, like maybe somewhere a 15-minute demand lower in this week, if price does pull back up to here. And looking to take longs in this situation, we can do it. I wouldn't be 100% against it. I just want to pose the question as to why. Why are we looking to buy the market when all signs are showing bearish nature? Okay, especially when we have high momentum like this. I know this was driven by news on Friday night, but a lot of times when this occurs, price won't actually make it all the way back up to EQ. If we do have a 15-minute realignment here, and then your entry criteria is met, yours may be different to mine, then we can definitely be jumping down onto the 1 minute, if that's a time frame that you like to trade, to be looking for shorts in this zone. If it does give us a little pullback, great. We could be taking full profits sort of at a more conservative target. And if price does if price does pull back all the way up into this zone, then even better. These are the entries where if we get into here, we can even hold some all the way down to the 4-hour low, as that should be targeted if we do see 15-minute realignment here and seeing demand zones start to fail on the way back down. Let's jump on and have a look at GU. So we've had a very bearish week on GU, and just looking on the weekly, let's just identify our supply and demand zones. So this here would be the supply. Why I wouldn't use this one here is that on this time frame, this is just one strong push. We haven't yet had a couple of candles stop and give us a bullish pullback. It's just a pause in the market on this time frame. When we jump down to the daily, we can see that there was actually a bit of a pause here. However, as we're marking this supply and demand zone on the weekly, we need to see it on the weekly. So this here would be that supply zone. And then if we have a look and drop a horizontal line here, and we go to the left, again, just like EU, it has been some time since we've been this low. Okay, let's have a look at what we've got here. Okay, these candles haven't formed the best. Let's try to make some sense of this. So price is pushed down, pushed up, given us a supply zone, and then that has come back down. So if we look at this whole area here as a supply zone, we haven't really interacted here. I wonder if this gap on another broker would have not been a gap, but if price was interacting at this level here, if we look at this as another supply zone, again, on the weekly, it wouldn't be, just because it's one candle. But if we were to drop down on the daily here, we probably would see a supply zone on the daily. And then what we can see is price would have interacted with that supply zone, pushed down with this little candle that we've printed, and then break to the upside and to return bullish. So this here looks like a demand flip zone. I'm just going to make it a little bit bigger. I think it's the broker that's giving us the issues with the gap. Again, wow, it's 1985 was the last time we were this low. There is still going to be liquidity there. So it doesn't matter how long it's been, there is still going to be liquidity there. I'm going to mark this here as our demand zone. Pull that across to the right. Okay, so on the weekly, we do have quite a big range. Obviously, this last week was very bearish for GU. We dropped a total of 626 pips. So again, let's not try to spot the bottom and trade the pullback. Let's wait for the pullback to occur, realign bearish, then continue shorting. So I'll mark this here as our demand. There's our supply. Let's jump down to the daily. On the daily in this leg, so we had this one. I think this was the one that we had last week. If we have a look here as well, so price came to a stop, pushed up, printed an inside bar, and then pushed a little bit higher. So if we have a pullback from the bottom of this week to the top of this week, of 110 pips, we can use this here as our structure point. So this would be that daily boss, leaving this as our daily high. And again, just like EU, we haven't yet had a significant enough bullish pullback to be calling the daily low. Let's just place it a little bit lower than where price is at the moment. Jump to the 4-hour. And then after we've had this daily boss, we'll then just follow price to wait to spot the 4-hour bottom, which would be identified once we had a pullback greater than 90 pips. So just given that GU does move quite a bit more than AU, I'd say a pullback of at least 100 pips on the 4 hour. So this here is 153 pips. Therefore, at the time, this would have been that 4 hour low. And then we have seen that being broken. So that would be the 4 hour boss. Highest point above that line is our 4 hour high. And again, we just haven't had that bullish pullback to be able to spot the 4 hour low. So this, I'm just going to label it daily plus 4 hour low. And just keep in mind that's not actually where it is at the moment. We'd need to see a bullish pullback greater than 100 pips on this time frame to then identify that as our daily low. So if we look at this leg here, and we're just looking at the 4 hour now, let's identify some POIs. So we had this as a demand zone, quite similar price action actually to EU, pushed down, this set a new higher high, prices interacted with that, pushed up a little bit in this candle here, and then this would have been the supply zone at the time. So this is a very nice zone. We do also have these interaction buy to sell wicks here. Okay, when we have wicks like this, or it doesn't necessarily need to be wicks, whenever we have a POI like this, which is nested right below another supply zone, this potentially could be used as inducement, just sort of liquidity before the real move occurs. But not always. So if we do still have realignment here, we can be entering if it's part of your risk appetite and if it's part of your risk management plan. We have actually swept liquidity above this candle here as well. If we drop down to the 15-minute, there would be several highs there and then price breaking above, pushing below, resulting in a sweep. And if we then just follow price down, we have these buy to sell wicks here, we have these buy to sell wicks here, and we have these buy to sell wicks here. These ones here are going to be a zone that I can mark up straight away. Why the other two aren't yet is because what I'm going to need to do is have a look to the left and see what this is interacted with. So what is this candle telling us? It's that price pushed down, tapped into some sort of zone, and then there must have been buy orders resting within that zone, which has then allowed price to push back up. It absorbed everything that was resting within there. However, there was still more selling pressure than buying pressure, which has resulted in price continuing lower. So what we need to do is actually identify if this is actually tapped into anything of significance. Oh, sorry. Got a bit trigger happy there. And yeah, a little bit higher. Perfect. Let's have a look where that's tapped into. Hopefully we can still see it on this time frame. Don't know how long in the past it was. Okay, nope, not there. Might have to go to the daily. Looks like it was quite a long time ago again. Let's just have a look if we were to go to the daily. Okay, so that's where price currently is. Oh, looks like it's those two zones. Wow, great candles, TradingView, thanks. All right, so obviously we can't really see very much on this chart like this. However, this was that supply zone we were looking at on the weekly. This was where the gap was. Again, it's just because it was 40 years ago that it's not really showing very accurate price action here. However, there again, like I was saying here, that there would still be liquidity. What has actually occurred is, and I hadn't actually looked at this prior, but prices obviously pushed down. There would have been some orders resting within here from all the way back then. Not necessarily limits or anything like we use today. There just would have still been liquidity in that zone. Everything like this will be covered off in the course in a lot more detail. However, once it's pushed into that, it's absorbed whatever was still resting within here, pushed up, which has resulted in that wick and where we're currently trading. And then again at this zone as well. So obviously I can't really mark up any demand zones within this, but they're there. So we can get rid of those, go all the way back to where we were, go back to the 4 hour. Agree that there is going to be a demand zone there, even though we can't see it because it was 40 years ago. And then let's identify these zones as well. So again, just as before I was saying, when we have a zone like this nested below a nice supply zone, that this could be used as liquidity for this zone. This could also actually be the liquidity for this zone. So that's why if we do have everything aligning and if our entry criteria is met, we will just enter. We should also mark up the extreme, as that is always going to be valid. Okay, and then we also have these buy to sell wicks. And that's everything in terms of this bearish leg. There's not really much structure to be trading off at all. It's not really nice price action to be trading. Let's not try to just buy in this market again, especially this is a lot more bearish than EU is as well. If your trading plan does say that you can take a long after, say, for example, a 15-minute change of character, sure, by all means, go ahead. Ideally, we'd be wanting to wait for price to pull back into one of these zones. So say this was to be the 4-hour low. I definitely would not be taking a short from here just because of how low in the leg it is. This one, yes, it might not be in premium, but that's fine. We can, if 15-minute realignment here gave us a chock like that, we could be trading shorts from this zone up and until an unmitigated demand within this potential leg. And then if price was to actually come all the way up to one of these zones, which I don't necessarily think it will, not straight away. Anyway, given how bearish we've come down, I don't think there's going to be too many orders remaining within this demand zone. We might need to actually sweep the whole zone before we get enough liquidity to push us higher. But again, once we have 15-minute realignment at this zone, this zone, this zone, or this zone, shorts will be valid. In these scenarios here, we could potentially be holding a little runner all the way to the 4-hour low. Here, I would just be targeting the next unmitigated demand. So if you guys do have any questions, please let me know. I am actually recording another video for you guys, which will be posted throughout the week, which is something that I've been working on in terms of my productivity and efficiency. So I am going to be creating a free Notion template for everyone to be using. So please comment below if you'd like me to send that to you once I've got it all completed. And I'll be making sure to respond to every comment. So please do comment below to let me know that you'd want a copy of them, and I'll make sure that throughout the week I will respond to all the questions and make sure that if you've asked for one, you'll be emailed. I hope you guys have an incredible week ahead, and I look forward to creating next week's YouTube video. Thank you.